So you want to be a scalper in the Forex market, do you? Let's talk about that and more right now. Hey Forex traders, it's Andrew Mitchem here, the Forex Trading Coach video and podcast number 273. And I want to talk about the high-paced action, where all the action happens in the 1 and 5 minute charts, because that's what you need to trade if you want to be a scalper, don't you? And do you want to be a scalper? Well, that's what I get told by so many people. I had another email just this morning saying, hey Andrew, please can you teach me strategies so I can be a scalper? I'm going to talk about the pros and cons of scalping, and by the end of this video and podcast, you can make your own decisions. But let's talk about it. You know, what is it? It's trading 5 minute charts, maybe 1 minute charts, and it's looking for small incremental gains all the time. Sounds real cool. Sounds amazing, because as Forex traders, we think that we need to be sat there watching the charts all the time, taking every little pip up and down. And that's unfortunately what so many new traders think. Look, I did the same 15 years ago. All I wanted to do was just take little trades, watching every pip move up and down. I can promise you the reality is that on those shorter time frame charts, the probability of you seeing a really high quality trade setup on that pair that you're trading at that time that you happen to be looking at your charts is quite slim. And, you know, with hindsight, with the benefit of hindsight, I can go back through on 5 minute charts and go, oh, look, there was a great setup here and there's a perfect setup there. But the chances of me being at the computer at that time, you know, is quite slim. So the reality is that most people then start to force trades to happen, because I'm sat there ready at my computer. So I'm ready. So where's the trade? And that's what most people think. The reality is that the market will show the right setups when the market is ready, not when you're sat there ready. And that's quite a hard thing to understand for many new traders. So therefore, what you start to do is you take trades that are not really that great a setup. The other problem being is the spread becomes such a big part of your trade. So let's say, as an example, you were wanting to take a 10 pip profit target. Now, I don't know why you'd pick 10 pips, but most people seem to think 10 pips because it's an easy round number. The problem is, let's say you're trading British pound US dollar and you've just paid 2 pips on the spread, the difference between the bid and the ask, your cost of taking the trade. So now your 10 pip profit target, is that 12 pips away? Because you've already paid 2 pips, so you're basically minus 2. So to get to 10, you have to actually make 12. That's not, you know, quite so exciting. If you make 10 pips and you've just paid 2 as a spread, well, haven't you just, and let's say you hit the profit, haven't you just lost 20% of your total profit to the cost of the spread? The reverse of that is the stop loss. You want a 10 pip stop loss. So does that mean that once you've taken your trade, you're now minus 2, let's say, effectively? That means we're only 8 pips away from the stop loss. So there becomes another problem. So it doesn't really work in your favor. And that's, you know, when you start talking reward to risk trades, you're now a 1-to-1 at very best. So that means that you actually need to make probably 60, if not 70% winning trades. And that is very, very difficult to do, especially when you bring the emotions in of almost feeling like I have to take a trade because I'm ready. So you can see all the difficulties now starting to mount up. The reality also is that it doesn't take a lot in the Forex market for a 10 pip reversal, you know, or change in direction. It could be just a spike. It could be a news announcement. It could just be simply that the market retraces against where you think it's going to go. And 10 pips just stops you out time after time after time. Very, very difficult to get high win rates when you're starting to do those type of trades. So my suggestion after all of this is to look at least the 1 hour charts. Don't go any lower, you know, especially when you're new. It's very, very difficult to do. Look at the 1 hour charts as the absolute sort of lowest, shortest time frame. Look at the end of a candle. Don't even bother looking at the chart in the middle of a candle. If it's say like 1/2 or 1/4 to, don't even bother. Wait until like a couple minutes before the 1 hour chart closes, then make your analysis when you've got time. Emotions are, easier to control. You can look for your profit targets and your stop losses and then place your trade if you see a suitable setup. So that's the way that I would go. It makes life a lot easier, takes the stress, the emotions out of things. It takes the cost of spread, becomes a smaller factor. And your overall profitability and your enjoyment and your longevity of trading will massively increase. So I hope that helps. Once again, this is Andrew Mitchem, the Forex Trading Coach. I'll see you this time next week with some more great trading tips and information. See you then. Bye.